The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed.
Welcome to Stock Take. My name's Gaurav Sodhi. Joining me today are analysts James Carlisle. Hey, James.
Good morning.
And Graham Whitcomb from Vancouver is with us also. Hey, Graham.
Hi, Gaurav.
Gentlemen, let's get straight into it. Graham, you wrote an interesting piece on Life360, a business I've heard a little bit about, but I must admit I'm not familiar with it very much. I haven't actually read your piece yet. It only went up a couple of hours before we're recording this. By couple, I mean like 25 or so. So I haven't gotten to it yet. But this is a good chance since I've got you for a little while. Can you explain why the interest in Life360? What surprised me was that I think I usually know what kind of business each of the analysts is interested in and what they're going to be drawn to. And this was not one I expected to hear from you about. So what was it about the business that you thought was interesting? And perhaps you can enlighten me about what it does again.
The reason for covering it was recommended to me by our boss.
Was it nothing?
I wouldn't have probably naturally gone for it, but it was an interesting company.
Mickey was looking at it last year, wasn't he? So, and I don't know. I think that's.
I never heard about it from Mickey.
Oh,
I know
he was. Yeah, I mean, look, I had a few conversations with him about it. We were sort of tossing it around, and I suppose that was somewhat unresolved, and so I think that might be why it ended up getting kicked over to you.
Yeah, I think that it is one of those businesses that seems to get a lot of differing opinions. There's definitely a camp that think of it as the high-tech growth stock. It's our next Google or something like that. And there's another camp which is more that it's just, I mentioned this in the article, this idea that it's just a feature. It's not really a standalone company. It's eventually going to be bought out or fade away, or it's just a fad or something or other. So I think that alone makes it worthy of just taking a look at, because there are these opposing arguments, and when you've got opposing arguments, it can sometimes make opportunities.
It's interesting. You get these battleground stocks from time to time, don't you, where there's well-researched and I find often well-argued points on both sides, and that's where that leaves room for mispricing. I think that's right, Graham. It's often a really good opportunity to dig deep into those things. So what did we find with Life360? Just explain the basics of the business and what it does.
So Life360 is a family sharing app. You can give it to your kids or your parents or something like that, and everyone can download it on their phone, and then they can track where everyone is. And there's a few other, the way that it makes its money is that it can charge these premium subscriptions, which have a bunch of different features that are maybe, I actually don't see the whole point. I've never really used it, but I think the people that do use it seem to value them. Things like roadside assistance, and there are different insurance policies attached to it, and things that you can get externally through third parties, but I guess the app packages them together and makes life a little bit easier.
I think there aren't the 3 levels of subscription. I think I'm on the middle level. I think they have a free one which just sort of tracks people, a middle one which gives some level of notifications when people arrive or leave places, and also tells you how fast your P-plate child has been driving and whether they've been using their phone. And that sort of thing. And then there's the premium, which for quite a lot extra, I think, offers the possibility of getting, as you say, roadside assist and all that sort of thing if anyone has an accident or. Sort of. I haven't looked too deeply into all those premium features, but I think that's the difference, isn't it? That's the difference from something like Apple's Find My, because Find My you can find where anybody's phone is at any point in time, but it isn't yet constructed, and I say yet, and that's really the key thing for me, isn't yet constructed to provide notifications when people come and go from a particular spot. And that's what Life360 does. So I get a little notification when each of my children arrives at school, so I can just sort of say, "Oh, that's good, so they're there,"
I see.
and that's rather than having to get my phone out and say, "Oh, well, they're there," and which
Yeah,
is all feels a bit creepy. It's just a bit nicer just to get a notification. You get on with your day, child's at school, that's all good. So
that's
that's what
interesting.
it does. But it seems, sorry, Graham, I'm diving in and stealing all your thunder, probably, but
No, do it.
it seems to me that that's not an impossible feature
Yeah.
for Apple to add, and I don't know where Google's at with all of this with its maps, but again, um, wouldn't seem a million miles away. There's also a thing called Snap Maps, which all the kids use to track each other, and
Is
I
that
don't.
part of 360 or is that a different
No,
version
that's
of it?
part of Snapchat,
Oh, right. Okay.
and but I think adults are not permitted on that platform. It's for under 18s only, or something.
Okay. Right.
That's what my son told me.
Only for
Right.
cool people, Dad.
Yeah, yeah.
Graham, this for me, this already I can totally understand why this is a battleground stock because it looks like it relies on location technology that is inbuilt in phones, and so this is just a fairly. It sounds like a fairly basic layer of software that utilizes Apple hardware. Is that the basics of it?
Yeah, I mean, I'm sure they've got their own. Uh, I mean, they're paying a bunch of software engineers millions of dollars, so they must be doing something behind the scenes. But
Mhm.
the basic hardware technology is in the phone itself, and they just recently purchased this other company called Tile, which makes
Of course, we
the
know
small
Tile.
Bluetooth trackers. Yeah,
Well, that's almost been put out of business by
That's right.
Apple's Find
That's
My, because
right.
Find My, because
yeah,
I used to be a customer of Tile and had a few of those on my keys and whatnot. But as soon as Apple came out with its,
The tags.
its tags,
Mm,
I was just straight onto that because they just integrate so much better with my phone and everything, and that really speaks volumes about the thing. Um,
yeah,
I mean, Tile. The idea behind Tile was that it was going to get some network effects, so that if everybody was using Tile, we'd all be finding each other's keys and sending alerts, not within privacy parameters and sending
mm,
alerts.
mm.
Um, but the trouble with that is, I mean, and that might work, and that might, if you can build that network out before anybody else gets there. But the trouble is that Apple already has a network. I mean, it
Yeah,
already has
that's right.
everybody, and so it can just flick a switch, and suddenly this functionality has all those network
Mm,
effects. And to get to a point where you're ahead of Apple on all of this, and the other thing, just taking it back to Life 360, I just don't see why there's a network effect there anyway. I mean, it wouldn't matter to me a fig if anybody else was using Life 360. I
mm.
still get the same notifications when people
Yeah,
arrive at a certain place. There's with tiles, it's slightly different with the Apple tags, because people do, if someone wanders past your keys in the which you left at the gym or something,
yeah,
then it would sort of find them without that person who wandered by knowing.
yeah.
And so there's a network effect there. But for Life 360, I don't see that. There's economies of scale in the software development and all that. Um, but I'm
Would you
not
not say
sure.
that there's a small internal kind of network effect where once your family is all on it, you're less likely to have to go to every kid and change their,
Mm.
uh,
Well,
yeah,
once, yeah,
the
I
app?
mean, but that's 4 or 5 people. I mean, it's pretty.
It just makes it a little bit more stickier, though.
Yeah, I mean, look, I think what's sticky is that once people are using it and they're comfortable with it and they know the interface, then
Yeah.
you do need a reason to change. Um, but that's pretty small compared to a telephone network, and I mean a full-on network where you have to be on it to make any use of it.
So, Graham, tell us about the customer size and the revenues being generated. It sounds like they've made somewhat of a success of this already, and it's particularly potent in the US. Is that right?
That's where most, sorry, where most of their users are. Uh, and that's probably going to be where it stays and where its kind of homeland is. Their goal is to make it much more international, but
Mm.
yeah, I just don't buy it. Maybe I'm now a little too biased, so I can't give both sides of the story. But uh, yeah, I do not. I would not be betting on this company being around 10 years from now.
Just give us
They're
a
just
Well, what's the user numbers and what's the revenue that they're getting from those users?
They make around 100 million, I think 112 million or so
Hmm.
US dollars at the moment. Most of that is from US customers, but they do have some international revenue,
Okay.
including Australia. Uh,
And are we talking hundreds of thousands of customers, or is it millions, or
they've got around
what's the?
33 million that are actually using it. Most are just on the free version, but
Yeah, right.
there is a small set that use the premium features, and it's that little group that are generating all the revenue.
Yeah, well, that's quite extraordinary. 33 million people are already using this thing. Then I'm very surprised by that. If you had asked, well, yeah, if I had given you a guess earlier on, it would have been a lot less than that. So a order of magnitude less than that. So that surprised me. Why? Do you have any theories about? Is this just very successful marketing? Is it word of mouth? How have they gotten so many customers so quickly?
Yeah, I do think that it's partly word of mouth, and they seem to be well liked by their customers.
Hmm.
So, and there's also that feature that once one person signs on, there is a little advantage to getting the rest of the kids, then mum and dad, then like the grandparents or whatever, they're all on board as well. So
Hmm.
it can spread. Getting each additional customer can sometimes bring 5 customers. So it does have that ability to grow pretty quickly.
I
And it was also, oh, go ahead.
Sorry, I was just going to say perhaps that's the network because you hear about it at the school gate, really.
Yeah.
So
Yeah, that's right.
that's
Hmm.
where effectively at a sports at a game, a match. Another parent mentioned it to me, and I'm like, oh, well, okay, I'll have a look at that. And I guess that once you get a critical number of people using it, then it becomes the thing that's talked about, and so you hear a bit about it.
Yeah, right.
And I wonder also whether, because it's based around family safety, uh, anything that kind of starts triggering that kind of safety thought process, it's probably going to lend itself more to word of mouth because you need that trust up front to be able to want to actually use it. You don't want to download an app that's unreliable or something if you're trying to
Hmm.
figure out if your kids are home.
Yeah,
Hmm.
I would say most parents that I know, I would say, yeah, I mean, look, I haven't talked to them all about it, but my guess is that most of them would have heard of Life 360. Most
Hmm.
of the
Yeah.
with secondary school age kids, teens.
My experience with apps as a business generally, and I know we can, Facebook is an app, but it's a lot more than an app. But uh, my experience with apps as a business generally is that they do lend themselves to fashion and fad. They come in and out of favor, and I wondered, Graham, if you have any thoughts on that, whether this might be one of those businesses that people keep on their phone for some time until something else comes along. Apple is the most obvious competitor, and what happened with Tile is quite instructive for Life 360. But the user base is large, and maybe that offers some protection.
Well, yeah, I mean, I completely agree with you. I think that's the big threat to them is that it can look sticky now. I think they always report, management like to talk about their user retention rate as being close to 100%.
Hmm.
Once someone starts using it, they keep using it month to month.
Hmm.
But I think that's an illusion that this can change in a heartbeat. If a slightly better app comes out, if Apple releases a new feature or something like that, you could suddenly see the users go down
But
90%.
I
So,
also I'm surprised by that churn number because I mean maybe it just hasn't been going for long enough because it's a bit like we've talked about this before, Gaurav, with the
Baby formula.
no, well,
Yeah.
baby formula, but also the
Hmm.
baby retail. What's the
Oh,
retail?
Baby Bunting.
Baby
Yeah.
Bounty,
Yeah.
where you have to win your customers. A whole bunch of new customers. Your customers are only with you for a few years, and
Yeah.
and then you have to win a whole new sort of cohort
yeah.
Yeah.
all the time. I mean, the churn rate. Most people, if really the sweet spot is teenage kids, and it's hard to imagine that adults
Hmm.
are really going to be wanting to track their track adult children. I don't think that
I wonder
adult
how many of
children
their
will be.
customers are spouses tracking one another.
Well, but you have to agree to it. I don't think spouse. Yeah, well,
Oh, right.
sorry, that's
Okay.
your point. I mean, I don't suppose spouses really want to be
Yes,
trapped. I
that's
mean,
right.
look, I
That's
don't.
right.
Anyway, I mean, the point is that it's sweet spot.
Mm.
I think very definitely teenage kids where you want a degree of knowledge about where they are, but not to be too intrusive, sort of thing.
Yeah, the
Um,
reason I bring up baby formula, I know it sounds like an outrageous comparison to make, but with the baby formula, my view, because I was going through, I had very young children, sort of sub 2 years old, when that whole infant formula craze was happening, when the white cold craze was happening, and my experience was that uh, the mother networks actually seed the idea of what's the best formula, but every cohort actually has a different idea about what's the best formula. So I thought we were going through a bit of a fad for A2 milk where all the mums were recommending A2 milk. But the next cohort coming up after that would have a different idea. You know, goat's milk is the best thing. And then everyone would take
mm.
goat's milk. There was every cohort, because there are so much word of mouth and so much opportunity for networking amongst mothers groups.
But it's just
Uh,
the natural
whatever,
natural churn, isn't it? There's a natural churn, and then also, as you say, that word of mouth
yeah.
causes whatever the latest thing is to spread quite quickly.
And I wonder if
Um,
that's just exactly what's happening here. You've got a cohort, or maybe two cohorts, where everyone's on this app, but the next cohort that comes along, they might choose something different. And whatever that cohort chooses, everyone is going to jump on that thing. Because as
yeah,
you say, JC, the way this thing spreads is at the school gate,
but
when you hear about it.
But even if it's not a case of people switching, even if it's just a case of the new app winning
Well,
new
that's right.
people,
That's
the
right.
the people the
That's it.
people the current people you've
Mm.
got are going to roll off within 5 years.
Yes.
So
Yeah.
it's you've got to keep winning that new group, and that's a difficult. It's not like a bank where you get someone
Yeah.
in their teens or whatever, and then you've got them for life.
Or toothpaste is the other example. Toothpaste.
Toothpaste, yeah,
Once
perfect,
someone picks
yeah.
a toothpaste,
Yeah.
what is?
You try
How
to get
often
me
do you
off
change it?
Colgate. That's right. Yeah.
Well, I actually got off Colgate, and I'm an Oral B user, and I will
Oh
never.
man,
I just don't switch. I would never
I
switch.
couldn't imagine using Oral B.
I don't like one company having 80% of the market for something like toothpaste. I did it for for activist reasons, I think.
Yeah.
And they're just so. Anyway, this is not really about
Yeah.
toothpaste, but
No, but it's a that's a very very good point. Yeah.
yeah,
And I think that's where Life360 and the infant formula and the baby buntings and other things where they've got there's a small sort of window that they struggle perhaps because they've got to keep winning that new cohort.
I think that's actually a very difficult thing to unravel, and we need to be aware of it. Is that sometimes when you're looking at businesses and the metrics look so good, it's not really how it's what the thing to focus on is not so much how good are those metrics, is just how sustainable are they, and small insights like that, JC, about how it's sold and how the user base actually grows. I mean, those things are important. Zero is another good counterpoint to this because in Australia, anyway, the way Zero gets distributed is via accountants. So when Zero convinces one accounting group or one accounting firm to take its software, that generally runs through the entire accounting network. All the clients use the same thing, and so to switch, you actually, individual customers aren't usually going to switch until their accountants say, "Okay, I've got something better. Maybe you should try this." Whereas, that's a much stickier product. Whereas this, I question how sticky this product actually is, and I think JC's point about eventual churn is a good one. I wouldn't buy this, guys. I'm surprised so many people we know and respect own this stock. Actually, Nathan and I had lunch with a fundy friend of ours. Many people probably guess who it is, actually, and he was speaking about this stock, and my impression then was pretty much as it is now, and that's disinterest.
Well, I don't
Mm.
know the valuation. I mean, there's every chance, that someone like Google says, well, we could either spend a couple of years
Yeah,
developing all this, or we just
yeah.
buy it.
I find with these high growth software stocks, though, you want to get the business right first. And the valuation, if you're right about the business, the valuation probably you can afford to be a bit off on that and still do all right. But if you're wrong about the business, the valuation is not going to save you. Buying this cheap is not going to help if you got the business wrong.
My point is that Life360, the technology, I mean, it may have 33 million users, but how many has Google got? I mean, it may be that this software is much more useful to Google. Google could make much more value out of this than Life360 can. That's just an alternative point of view. So in which case the valuation ought to reflect that, because there'll be people looking at it.
Yeah, and that's the other thing, is that it's hard to judge, because you can value it either based on its financials, and my personal view is that it probably won't ever be profitable, in which case what's it really worth if it can never actually churn out more cash flow than it sucks in. But you can tell how it has a strategic value to someone like Google or anyone else who can use all that data that's being generated. That if you know the location of 33 million people, and this is where actually Life360 got into trouble recently with selling its data to third-party brokers, which, like, it wasn't disclosing to its users very well. So there were lots of parents who were understandably
That is a
upset that this
great way
company
to
was telling
destroy
where
your
their kids
business.
are. Yeah, I know, it was just nuts. But anyway, they that's what they were doing. They aren't doing that anymore. But
Google have that
yeah,
information anyway, don't they? Or
well, Google
through
might, but
Android or whatever. I suppose it depends on whether you've switched on your location services or whatever. And maybe, look, I'm guessing a bit now, but maybe Life360 is something that encourages you to do that. And then, yeah, look, I don't know how the data works, but that is something that could be of value to someone, isn't it?
yeah, you can tell how knowing where 33 million people are, particularly families and specific demographics you might be wanting to target for ads or something like that, that information is valuable. It's just hard to put a number on it.
And also, I think if you start monetizing that information, you quickly lose the user base.
Yeah.
Yeah.
No one wants to sign up for that. I think this is problematic software to begin with. Really, you really want to be very tight about. I mean, trust in this kind of software matters so much.
I'm stunned that they didn't think through the implications of what they were doing, because it was only substituting their revenue by, like, I think it was 15% or 20% or something or other.
And it risks so much more than that.
And yeah, it was risking the whole business, basically.
Yeah. Wow.
It just didn't seem like a great risk reward, if, like, ethical reasons aside.
Interesting. All right. Well, it sounds like there's no battleground on this talk for us. I think we got a unanimous nay on Life360. Anything else you want to add?
No. What's the next one?
All right. Let's move on.
Let's look at a nice one. Go on. Let's move on to me. It's something a bit more exciting.
Well, if you want exciting, then you got to be talking mining. Look, I apologize again. I know we've been talking mining for a couple of weeks in a row, and I don't want to do that. It's not, I think there's interesting stuff going on, but
how much have they gone up since we last spoke?
Look,
that's what I want to know.
I'll admit,
again, or what?
The first few times I brought it up was mostly about boasting, but this time we're just getting so many questions about sell strategy and should I take profits now when it's gone up this much? Like, when do I sell? And look, I've been trying to be very slow with changing recommendations, and we have to be very careful because I can't actually give personal advice, as everyone knows, and we tread a very fine line there as it is. So that's why I haven't said too much about sales and selling and.
I don't think we're trying to find line there. We don't give personal advice.
Well, when I'm answering those questions, I can't tell someone to sell.
No, that's right.
Yeah, sorry, I should clarify. Yes, yeah. When we're answering those questions, we just have to be very careful.
We have to not answer them, unfortunately.
Almost.
Yes,
we almost have to not.
We have to repeat our general advice. Is the point?
Yeah. But anyway, look, I thought I'd just have a general quick update on these stocks that have been flying, and the ones I'm specifically speaking about is the ones that were recommended in the Contrarians commodity portfolio. So we're still talking about the two coal stocks, Whitehaven and New Hope, South 32, Woodside Petroleum, and Alumina, and we'll throw in Karoon since that's the other big resource recommendation we have. So there's 6 stocks, and all of them have really ripped higher. And partly that's because we recommended them at when no one else was interested at low prices, but it's also partly cyclical and it reflects what's happened in commodity markets, but also how scarcity premiums have now been built into a lot of commodity prices, and those premiums could hang around for a long time. Now, the difficulty with our very rigid record guides is that like I can't really anticipate security premiums, supply squeezes, or wars, right? So
Yeah,
uh,
the price guide should be some sort of algorithm, sort of formula based on
that
the
changes
commodity
every
price and
hour or
everything. Yeah,
something.
that's right. Yeah, it is a bit of a difficult one, and putting lines in the sand in such a dynamic situation is but that's, we try. That's what we work within, isn't it? Yeah.
There are two temptations to fight here. The first temptation is once some people are so thrilled to make money out of a commodity stock that they want to sell it instantly. I'm looking at you, JC. I bet you're that kind of person. And often the flows of prices being low for a long time and then being high for a long time, it takes a long time for supply to respond to commodity prices. So that's why we see these very long cycles in commodities. They can last years. This is not like agriculture where this season the price is high. So in a season or two, new supply is planted and comes on market to restore equilibrium to prices. This takes a long time to restore supply balance. So you do get prices staying high for longer than anyone expects. And I suspect for many commodities, we are in that kind of environment. So we want to be slow when we're selling, and just act slow generally. There's no, when you see a bargain, you want to be kind of quick buying it most times. But when you're selling into this sort of environment where, you've got inflation, interest rates, supply crunches everywhere, a very muted supply response, you just want to be slow selling your gains. And the second temptation is to think that you're in some sort of super cycle and that commodities have reached a new peak and they're not going to fall for a long time. I think that's dangerous as well. I probably say I think that's where most brokers are now. I don't recall a more bullish time for commodities um, since the last super cycle, since that 2008 China is going to grow forever kind of cycle. It's become the consensus trade. Everyone wants to buy commodities. All these stocks are marching higher, and everyone thinks they're going to march higher still. Now, to me, that sort of signals it's probably time to start thinking about trimming position sizes now. So keep an eye on the website. I am going to start issuing a couple of trim. We don't. This is the thing. We can't say trim your position size in official record. It's either buy, hold, or sell. So you might see some sell recos, and I would just I would ask everyone to just act with nuance and act slowly. I don't think for none of those stocks that we've spoken about, those six stocks, they're all incredibly well run. And I said this at the time of the article. Usually, in the last cycle, when I recommended resource stocks, they were almost always crappy businesses with bad balance sheets and poor capital allocation, and we were buying them because they were cheap and no one loved them. And this time, we're actually recommending really good miners with excellent balance sheets, with excellent management, and we can afford to behave a bit differently this time because the underlying businesses and management is so much better. So yeah, so just want to say, keep an eye on the website. And look, I'm not ignoring questions. I haven't forgotten about them. I just think we want to be a bit slow when we're acting on these things, and I'll slowly introduce some cells as I think the time is near.
I think the thing also to remember is the maximum recommended portfolio weighting. I mean, these things have gone up quite a lot. So
Yep,
if you've gone beyond that, then that itself should be some encouragement
that's a good point.
to trim. And the trimming of stocks is really encompassed within. I mean, when we say sell, that generally means it's time to get out
Almost
completely, doesn't it?
completely. Yeah, that's
Yeah.
right.
I mean, so trimming is, we might well be still saying hold a stock, but that doesn't mean saying, hold every single share you bought at a tenth of the current price.
That's right.
I mean, if the thing's gone up a lot and it's now the position size is much greater than it was, then some recycling of profits into other ideas is always a good idea, I think.
Yeah. For me personally, I have an overweight position in coal, and I'm finding that quite difficult to deal with because they've gone up a long way. They are producing the largest dividends I have ever seen in from my portfolio. So there's a great temptation to hold on.
So here's my question: is
Yeah.
your weighting now bigger than it was a year ago?
Yes, it is
And
significantly larger. Yeah.
are the prospects for those stocks better than they were a year ago?
Yes, I would say yes as well.
Oh, you. Oh, okay. Well, there you go. That's
Yeah.
that's all right then. I was
But
expecting you to go, oh no, but
but those are good questions to ask,
well, I think
JC.
those are.
I think
No,
that's
that's
right.
the thing, isn't it?
That's the
Because
thing. Yeah.
quite often when a stock's
Mm,
gone up,
mm,
it's a bigger position of your
mm.
portfolio, and yet some of the value has already been realized, and so it's not, and you end up holding more in a less, um, good opportunity. So, I mean, I think that's the balance you've got to try to work out. I mean, you don't want to be chopping and changing too much because you end up giving all your money to your broker, but and the taxman.
Mm.
But when things move a long way and the portfolio weightings change and the value changes, the value equation changes. It's even if you're not selling out completely, you've got to address that a little bit.
Yep. Yep. All right. Now, just to prove that this isn't only about commodities, I just want to spend a few minutes on soul pats as well, if that's okay, gents, because I we don't write about soul pats all that often, but if you look back through our long, long history, soul pats is a constant. There are so many upgrades of this business over the last 12, 15 years.
Yeah, we've
Um,
done well with it.
and we've done really well with it over time. But you know, you could have just bought this thing at almost any time and just held it, and you would have done okay with it as well. And that's kind of the point I wanted to make in this latest article I wrote. I referred to Solpats as a instant portfolio, and it reminds me a bit of JC. You suggested it was a bit like a listed investment company, and I think that's hard to refute. But I just think it's a little bit different to that. I think of it almost like a listed private equity company because you're buying really the capital allocation skills and the track record of management, and you're just
Well,
relying
how
on
much of
them.
the portfolio is listed and how much is unlisted?
A decent amount is unlisted actually, and a growing. The important thing is that a growing portion of the portfolio is now unlisted. So it's probably a 70-30 split so far, JC, between listed and unlisted, but they're allocating more and more capital into the unlisted part, and they've spoken about growing the private equity portion of their portfolio and the debt and property portion of their portfolio. And what they want to provide is a wholly diversified portfolio for investors to access in one go. And the idea should be that they've earned the trust of investors to be able to just buy that stock and hold it for a long, long time without really having to worry about dividends being chopped or the management making crazy decisions, which I fully would be shocked at if that happened in this business. So, um, here's one company that is an instant portfolio, and I think you can add a couple of others on that list. Infratel, which is a former Biorec, is similar, instant portfolio, but it does bleed a massive fee over to its manager Morrison's, and that's the biggest downside. That's probably where Solpats is better. They just don't bleed those fees. And Wesfarmers is probably the other one, which I think
Well,
it
Wesfarmers is 70% Bunnings, really, and more of value. I mean, the
yeah.
value of Wesfarmers is probably, I don't know, 90% made
But
up
the
of
company
Bunnings.
you buy today could be quite different in 5 years' time, and you don't really know that. So you are buying the expertise of
The rest of
management
it would have
and the
to do
track
very
record.
well. But yeah, I mean, yeah, I would say, I'm not sure I would include Wesfarmers on that list,
Well,
but
think about what it was
I
five
hear
years
what you're
ago,
saying.
JC. We had Coles
Well,
and
we
a
had
whole
Coles,
bunch of other stuff.
so they demerged Coles. So
Yeah,
so it was Coles and Bunnings were the
yeah,
two. But so if they demerged Bunnings, it would look very different for sure.
yeah.
But I
And that
think
willingness that willingness to
otherwise,
chop and change,
yeah, yeah, they do,
that's
yeah.
important.
And they
And
could
and
take
Solpats,
they could build. I mean, they just bought API and they've got
yeah.
aspirations in that healthcare area. So
And
I
I
mean,
think
they
that
could
lithium
build up
business is going
other
to be very
areas.
big over
Yeah,
time as well.
yeah.
Yeah, so that's one. But I think that's the way to think about
It's a
Solpats.
capital allocator, I suppose, and that's
That's
what
it.
you're saying about
Yeah.
Soulpats, yeah, which is. fair. Yeah.
Yeah. So look, just things like earnings per share and even to some extent, really, the valuation, unless it gets really crazy. I mean, I know I've put a sell on it a few times, but it's really to free up cash for other ideas, and I think there are a couple of times where it's looked a bit extreme. I think anytime it gets up to 1.5 times net asset value is generally the time to sell. Anywhere at or below 1.2 times net asset value, I think is a time to buy. That's the general rule of thumb. It's currently sitting at 1.3. It's in perfect hold territory. I think that's fine. I spoke about being lazy with resources at this point of the cycle. This is a stock where sloth is always rewarded, and you want to permanently be lazy with it. I suspect, JC, the next stock we're going to talk about does not reward laziness at all.
Oh, I think it
Oh,
absolutely.
maybe it does.
Oh,
Okay,
absolutely rewards laziness.
let's
Jeez,
get to it.
if you'd have bought Technology
Oh,
One
I see what you're
in
saying. Okay, yep,
'99
yep.
and been lazy with it, you'd be on cloud nine.
No, you're
Um,
quite right. I detect a bit of regret in that
oh, I
thinking
never
as
looked at
well.
it in '99, but I looked at it in 2014 at $2.62,
Ooh,
and turned it down
was it too expensive, JC?
flatly. Yeah, oh yeah, it was on a
It was crazy,
P
wasn't it?
of
And
something
what's it
like
at now?
Oh.
17 or 18 or something ridiculous like that. I can't remember what it
We
was
would
on, but
jump over each other to get that stock at a PE of 17 or 18, wouldn't we? We'd
I
just
look,
throw anyone to the
I'm
floor.
sure it was on a higher P. And I'm joking, but it was look, it's gone up 4+ times since then, in 8 years, which is pretty good going. In fact, it's pretty much 15% a year. I mean, they've. I don't know whether they manage the business then. I suppose that way. I suppose they do, because it's, they're just slow and steady in terms of the way they develop it and the terms of the marketing they do, and they don't want to digest too many customers at once, and sort of, they're very, very slow and steady. Well, not slow. I mean, 15% a year, but they're relentless at that rate. Have been, I think, even since before the float. And they've just grown and grown and grown. And every time you look at the stock, you think, well, it looks a bit pricey. But then if it 15% a year is doubling every 5 years, right? So that PE comes down,
Mm,
halves every 5 years. And then and then it halves again. And then, so if that growth profile still looks like 15% in 10 years' time, then you've got a stock. You could argue for the same PE and you've doubled twice. So it's a pretty remarkable business. I should go back, take a step back, and say what it does. The thing about
mm,
Technology One, so it provides enterprise software for
mm,
running all the systems within people's businesses, or any organization really. And the key point of it, the way I think to understand it, is that some organizations differentiate themselves from competitors on their internal systems, maybe because they're big enough, or because they're specialists enough, or because they want to be different. They want to have they want to be different from their competitors by having the best systems, enable them to operate most efficiently. All of that. Banks would come into that, of course, but all kinds of other private organizations. But there are other businesses where you're not differentiating yourself on your organizations, I should say, not businesses, on your internal software. And indeed, it even makes sense for everybody to be on the same platform, really. And examples of that would be local government software. So local governments are a
mm,
sweet spot for Tech One. Healthcare, and education. Universities differentiate themselves, according to the courses they run, according to the teachers they've got, the research they do, not according to how they, manage what software they use to manage their business, or the organization. And so for those organizations, it makes sense to just be using the same platform, because then all of those research and development dollars can go into the one product to make it as good as possible, rather than having three or four and having that R&D budget split. So that's where Technology One is. It provides this sort of single line of code. They call it the power of one. It's one product where it has a bunch of modules, but it's essentially one product with one look. And
That's so
you,
important, isn't it,
yeah,
JC? That
yeah,
a lot of software products, and I think Hanson is kind of in this mold as well. That they actually have to target and modify their product for every single customer, and you just can't get the scale.
yeah,
Whereas something like this or a Zero, where it sells a single line of code,
yeah.
just multiple times to multiple customers, you can scale that so beautifully.
Well,
Would you mind?
and that's where the cloud comes in.
Yeah.
Sorry, were you going to say you want to
No,
go
no.
on a
I
different
was going to
tangent?
ask you about margins, but what you're saying is more interesting. Go on. Let's talk about the cloud, and then you can mention the margins, which I just think are astonishing in this business.
Yeah. So what I was going to say is it's just basically made for the cloud. So when you've
Yeah,
got that single sort of
yeah,
software product, and
yeah.
the cloud has just come at the perfect time for it. Um,
They're
and
quite late to the cloud, though, aren't they? This is a lateish transition.
I don't know about that. They just haven't pushed it.
Okay.
So I mean, they started developing the cloud product 10 odd years ago, or started rolling it out. I think 10 odd years ago. But they've got these sort of, I don't want to call them lazy, but slightly perhaps slow moving customers. In local government
I don't think
and
anyone would begrudge you
education.
calling local government lazy, JC.
And so they don't want to sort of push them. They buy some software that's installed on premise, and they're very happy with it, and they've got support for it, and it does fine. And that's the whole point. That's what Tech One gives to customers. They give this set and forget sort of thing. So they don't want to be saying, "Oh, actually, we you got to get onto this." But they've finally said that they're going to switch off support for the on-premise product in um, 20, 2024.
Right.
So everyone's got to shift over to, and I think that they've given people so much warning, and they've held their hands, and I think they've done a good enough job at explaining. I mean, it's cheaper for them, so they're saving money. It's cheaper for them and better margin for Tech One. I mean, this is the power of the cloud. Um,
Hmm.
and I think it bears some thinking about, actually, when you think about the cloud and what that means for a business like this, with all its customers. Um, Everything's hosted uh, up in the cloud and through huge data centers. And you know, every time a customer does something, at an organization, that gets sent, that instruction gets sent over the internet to
Hmm.
the cloud, to the software that's sitting up in a data center somewhere. So
Hmm.
all those customers sending all those instructions, all those employees, and in fact they're going to roll it out now. They're talking about what's the three-letter acronym? They're calling it DXP technology, which is so it's going to be the local government, the ratepayers are going to be able to interact with the software, and students at universities. So there's thousands more people interacting and sending messages to the cloud. I mean, it's quite phenomenal, and you need some really robust technology to do that. And
Hmm.
so they've got a very strong reputation, and they're now improving. I mean, they've got a very strong position in Australia and New Zealand. They've had a bit of a slow start in the UK, but they're now getting some good momentum in local government, and
Well,
there's reasons for optimism with the education market over there as well.
this was something I wanted to ask you about. One of the reasons I don't own this and never has it's not so much the price that puts me off. I think that's okay. I'm okay with paying a big multiple for a business of this quality, but it's the you want to have a lot of growth if you're paying such a big price, and I've always been skeptical about them succeeding overseas because the idea that they can go and grab these quite conservative, slow-moving customers, councils, universities, that just seems a bit difficult for me. I would have thought that the protection that Tech One itself enjoys in Australia, servicing these sort of customers, its competitors overseas would enjoy similar protections, and they would find it as difficult to break through there as competitors find
Yeah,
breaking
but
through here.
except that they've already got this single line of code, which is very,
Mm,
very well suited to these organizations.
right,
And maybe a slightly different module, whatever it is, but they can roll it out and keep it's still that single line of code, so they have those economies of scale already. But you've hit the nail on the head. This was my concern in 2014, and this was my
right. So I'm
concern
about
when
10
we.
years behind you. Is that what
Yeah,
you're saying?
no, oh, no, no, no. I mean, this is the obvious concern, I think, with this company is that there are limits to its growth. It's got to, where's it going to go once it's signed up all the local governments, and once it's got the whole of the Australian market, it's got to start pushing overseas into more difficult, and it's harder to see how well it does in those environments. But it is now getting some momentum in the UK.
Right.
So and the UK market, they reckon, is 3 to 4 times bigger. It's currently, I don't know, 5 to 10% of the revenues. And But they think it can be 3 to 4 times bigger. So there's a lot of growth over there, and that's before we even think about the US, which they could eventually go to.
Mm,
But also, I think I've been um, unduly negative on the potential for expanding within the current user base.
right.
So, the local governments and the healthcare and the education, they've still got more clients to win in those areas. But also, what they can do, what software can do for these companies, is increasing all the time. And the user, the DXP technology I was just talking about, getting the students onto it, the ratepayers, those are examples of how the utility of this software can improve, and they can charge more for that over time.
Mm,
Even if the cloud software, it's a bit cheaper, but clients tend to use, I think the average is 7 modules, whereas on-premise clients used 5, so they pay more but get more value, and so the whole thing, there's growth, and they make better margins from the cloud product
mm,
as well, and they can keep
mm.
making better margins as it grows. So, I think that the runway is longer than I had anticipated, but unfortunately, the market's ahead of me on all of that, and that's why the PE is where it is at about 50. Um, and it's the PE is slightly lower than so they capitalize a bunch of their R&D spending, which is fair, because it's definitely investment and growth, but it does slow down the arrival of the cash, and so that means that the P, if I mean put it, if they expensed all the P, all the research and development, the P would go up to about 70 or something, which would be in line roughly with Altium.
Right.
Look, I think Altium's a hold at the moment, not quite a buy. And I think I would probably, at a dollar for dollar, I'd probably prefer to own Altium than this. But this comes close. It's a very good business. But if we're not going to buy it, then we'd want it a little bit cheaper, below $10, probably more like 9. It's currently at 11
Yeah,
something.
it's not miles away, is it?
No, but I mean, this is the problem we've had with it. We've always wanted it a little
Yeah, just
bit
a little bit
cheaper, and
cheaper.
just
Yeah,
5 or
yeah,
10% cheaper. Give us
mm,
that extra margin of safety.
yeah.
And so look, we're going to keep watching it, but there's no point. And look, it's not a million miles away, but there's no point in us putting it on the formal coverage list, because it's a pretty steady moving beast. It doesn't need too much coverage, but it's
Geez,
one certainly to keep
from
an
the
eye on.
inside, you'd never know that Breville and Tech One weren't covered because I've heard you talk about both these stocks so much, James. That I feel as though these are your pet stocks that you'd love to get
Oh, look, I'd
on
love
that
them, but
buy list.
at the right price,
Yeah.
and they've never quite got to the right price, whereas other stocks have, and so they're on the buy list, they're
Mm,
on the coverage list, but they may
mm,
since have become holds. I mean, bear in mind that if we're not covering a stock, that it doesn't mean it's a sell for sure. It just doesn't mean it just means that it's never quite got to that buy point. But we're keeping a close eye on them, and look, this is why we're updating on them. Well, this is the first time in 3 years we've written about Tech One, but
mm.
Breville we've written about
Yeah.
a
Rest
couple of
assured,
times in the
both
last.
stocks are on
Yeah,
JC's mind all the time.
yeah. Well, look, and I'll be updating, I'm sure, on Tech One once every year or two, just not every time there's a result, probably.
Right. Graham, is this one you've ever looked at, ever bought, or been tempted by?
I haven't looked at it in detail, but I've had a quick look, and I think that it reminds me a little bit of Gentrack, which is what concerns me. Also, is that it's shift to the cloud. I can see how that improves margins. It's got all these positive things for customers and the company itself, but it could also just increase that industry churn, and that
Mm,
stickiness that the company enjoyed initially is going to decrease as it moves onto the cloud. Uh, so I think that it just changes the dynamics a little bit. That makes, I don't know, that can just throw up surprises over time. A competitor would be more easily able to
Yeah,
pull
that's fair.
customers away from it. So
Yeah, it's a very easy switch for them to get someone onto the cloud product, and that's the warning, isn't it? Because it's very easy for someone with a similar product, but I think they have confidence in their own product,
yeah. Well,
and
enterprise
that's
software,
the
famously sticky, right?
yeah, but as Graham says, I think less so in the cloud.
Mm,
But if your product's good and people have no reason to leave it, then and that's they have historically the churn rate's like 1% or something. I mean, they speak of how they hardly ever lose customers, and
mm,
but then
mm.
so did Gentrack. So um, yeah, look, I think that they're very confident of moving 95% plus.
I think
Um,
Gentrack's problem was so many of their customers just went bust in the scramble after deregulation in the
yeah,
UK.
in the UK,
I'm
yeah,
not sure they actually lost so many business as just the customers went to zero.
yeah. Well,
That's
it was
not going
that
to happen with Tech
there was
One.
that business they bought over there, wasn't it? And
Yeah, that's true.
there were huge there was huge optimism for it, and it ended up not quite.
Yeah,
But Graham's the expert in that. But Tech One, I think they're very confident. I mean, look, if they slip up and lose a couple of clients, and maybe that provides the opportunity in a year or two's time, because I think underlying, it's a very strong business.
nice one. Well, I'm glad to hear more about it. It's one that I've kept an eye on for some time, and like you, JC, never really been comfortable pulling the trigger on it either. But good to hear you'll keep an eye on it. Gents, I think we better wrap it up there. It's a lot of podcasting for one day, and we have other things to do, don't we? Like
We do.
having lunch and things like that. JC, that was fantastic. Thanks so much for your time today.
Always a pleasure.
Graham, always nice to hear from you. Thanks for joining me.
thanks, Gaurav.
And for everyone else, thank you for listening.